Welcome to my channel. For those who are new, my name is Dave. Now these videos are a mixing journey towards financial freedom, financial well-being, financial products, so you, like me, can reach your goals sometime in the future. Now let's get into today's video. Now it's not to boast or brag or say look at me, but it's to give people hope and encouragement. If I can build a portfolio over 6 figures, you can too. If you think long term, invest on a regular basis and invest within the tax-free wrapper within the UK. So let's look at, shall we say, how our stocks and shares ISA has performed during the month of February. What are the aims of the portfolio? Well, we're looking for annual growth year on year of 10%. For 2015, we're looking for annual dividends of £5,000 and a year-end portfolio value of £153,000. So how have we done in the month? Well, we started at 129,643. We finished at 131,186. So profit in the month of just over £1,500. January we're up 5.37%, end of February we're up 7.36%, so a very good start during the portfolio for 2025. The following graphic, our aim is contribute, shall we say, on a regular basis, start of the month. Now we put £270 in, start of the month. For the tax year to date we put 4171 and our platform providers charges monthly fees of £17.36 with a percentage of our portfolio valuation. Shall we say, mainly based in the UK, predominantly in financial services, what we do with what we deal with, but it's our own personal choice and preference. Look at the following graphic. Where exactly are the funds or the shares held? Well, nearly 60% is in UK and Europe, nearly 29% is in USA and Americas, and 11% is in Asia and emerging markets. What sort of dividends have we received? Well, we received one dividend from AJ Bell, the platform provider. We received £60.30. We reinvested in 30 new shares. Now, we're way below expectations, but have good months and bad months. But our average yield across our holdings, our shares, is 5.71%. And during the month, we had some great results. And obviously, April and May are our better months. Will pay us off and we'll get back on track. But a nice start, £60 a month, is something not to be sniffed at, shall we say. And it was reinvested within the holdings to increase dividends moving forwards. Now let's look at, shall we say, the holdings within the portfolios. So let's do our shares and then we'll do our funds on a separate basis. So at the moment we have 10 shares, finally all in profit and none in loss. We've got £63,000 in shares, makes up 48% of our portfolio, of which 43% in the FTSE 100 and 5% is in the FTSE 250. So let's look at the holdings within the portfolio. Our largest holding is Lloyds Banking Group, just over 20,000 shares. £14,500, 11% of our portfolio. Very good results in the month. Banks have done very well in February, but it gives a nice dividend of 2.11p payable in May, a yield of 4.4%. But great results. We own L&G, the insurance company, 4,749 shares, 11.5 grand, 9% of our portfolio. Very cash rich, shall we say, got a yield of 9%, and it will hopefully give us very, very good results in the month of March. We own Aviva, another insurance company, 1,898 shares, just over £10,000, 8% of our portfolio. Again, very good results during the month. Annual dividend increased to 22.3 pence a share, a yield of 6.3%, but it will give us, shall we say, nearly £1,000 this year in a dividend. Also, shall we say, on the banking sector, we own Barclays, 1,651 shares, just over £5,000, 4% of our portfolio, but again, very good results. Dividends increased to 5.5p as a final dividend, but a yield of 2.6%. We also own HSBC, 535 shares, nearly £5,000, 3.8% of our portfolio. Again, a very nice yield, but it's obviously put in dollars at the moment, will be converted later on. HSBC is somewhat different, it pays us a quarterly dividend. We own NatWest Group, 1,008 shares, £4,900, 3.7% of our portfolio. Very nice dividend, shall we say, 15.5p, yield of 4.5%, and it's virtually, shall we say, less than 7% now owned by the UK government, and that will hopefully be reduced next few weeks and months. And the shackles are finally off, it's got a free rein. Now away from the banks, we own Card Factory, 3,960 shares, £3,500, 2.8% per very cash rich, is expanding, shall we say, dividend resumed, but may be affected, shall we say, by the minimum wage and, shall we say, increase in national insurance companies because of the pay sectors within the employers. But a very cash rich company, and it is growing. We also own AJ Bell, the platform provider, who we use, 744 shares, £3,100, 2.4% per annum. But as we said, dividend of the month, assets under management increasing, customers decreasing, shall we say, and it's what we see as a growth company. Away from the banking stocks, we own, shall we say, Phoenix Group, the pension provider, 466 shares, £2,400, nearly 2% of our portfolio, but it's got a very nice yield of nearly 10%. It's what we deal with in work, shall we say, pension investments, and they're a big player. They've been buying companies out, but very cash rich. They're on a buying spree. And then finally, away from the banks and finance, we own Sainsbury's, a retailer. Had a great run recently, has struggled the last few weeks, shall we say, but a great trading since Christmas. We own 923 shares, £2,400, 1.82% of portfolio, but it's got a yield around about 5%. Everyone needs food. So a collection of shares, but they're all what we call long-term holds. We've got no reasons to own them shares in the foreseeable future, and as I've highlighted, we've got some great results in the month, and we will get some very nice dividends in, shall we say, April, May, in the coming weeks and months. Remember that my own personal opinions. If you like the videos, smash the like button, subscribe to the channel. Now let's see what funds we hold within the portfolio. Let's look at the funds we hold in the portfolio. At the moment we own 9 funds, 5 in profit, 4 in loss. Total full values of just over £68,000, which makes up 54% of our portfolio. Now we did obviously start off with UK funds. We've been buying funds to diversify. The cheaper, so it just switch off, does what it says to do. Our largest holding is a passive ventures fund through our platform provider, nearly 24.5 grand. 18% of our portfolio, just switch off, does what it says to tin, no risk, shall we say, or limited risk, but very reduced fees. We own a legal and general technology fund, £14,500, 11% of our portfolio. Had a great run, shall we say, 2024. Has struggled the last few weeks because of what's happened with Trump's tariffs, but it was done for the diversification. And shall we say, the big Magnificent Seven have had a great run recently. What will happen moving forwards? We own a Fidelity World Index fund, £14,200, 11% of our portfolio. It does give us a small yield, but shall we say, it was done for diversification. It's given about 10% yield every year, and we did top up that fund on a regular basis of £286 during the month. On to some funds that have struggled recently. We own a China fund, £2,700, 2% of our portfolio. Okay. We own 2 emerging market funds, both worth about £1,300, but makes up 0.1% of our portfolio. Has struggled, shall we say, they keep going to rebound, but we're not going to prepare to sell at a loss. But when they do come back to profit, we will, shall we say, disinvest from the funds and put into our tracker funds just for ease of management and to save fees. But at the moment, we're not going to sell at a loss. One fund that has, shall we say, really struggled is a Russia fund. We put £1,000 in. It went to £600 plus, so a nice profit, and been affected ever since from the Russia-Ukraine conflict. But thankfully, it's £249, makes up a tiny percent of our portfolio of 0.19%. Now we have put some funds away, shall we say, for a specific purpose. We put £3,000 S&P 500 fund, just didn't want to keep cash. Is now worth 3,468, 2.5% of our portfolio. Okay, it has struggled, shall we say, in February. And an FT All World Shareholding Fund. We put 5,000 in. It's now worth 5,876, but 4.5% of our portfolio. So shall we say, we've done it for, shall we say, diversification. This video gives some inspiration. If I could build a portfolio of 6 figures, you can too. If you invest on a regular basis, you invest, shall we say, on each month, and you invest within a tax wrapper. Remember, investing is not a get-rich-quick scheme, but you will get there at the end, okay? If you put the plan in place and you think long term. But if I can do it, you can do it. Remember, if you like videos, smash the like button, subscribe to the channel, and we'll see you again in the next video.